Unlock your potential with a comprehensive suite of investing tools and expert education with GammaEdge. Start your free 14-day trial today.
I mean, you've got the flattening of the CT, multiple days where it's not collapsing, and this is the USC, and it's holding steady, right? And then we start getting that move above, and if you take a look, if you isolate these, we had a trigger day and a solid day on Friday, right? We had basically a railroad track pattern, strong down pattern, didn't confirm on Thursday, confirmed on Friday. The only thing that is still bearish is we are still in a downtrend, but the distance between these two is closing, and if this slope remains positive on the CT, it's going to intersect this. You can already see how the slope of the red MA, the red moving average, is abating. So if this continues up, then we're going to start flipping this model into a bullish state. And then by all indications, if it, if the Palestinian-Israeli thing is any indication, we may reject tomorrow, right? This may turn off, right? It may go below. And, all of these things can reverse down. And we could get another major leg down, right? We could see this type of pattern again, all next week, driven in part by news and more news, right? So who knows? But at least we have a really good way of doing multivariate analysis on different time frames. So there is a preponderance of this evidence, and it is a mosaic, right? There's the CT, there's what I had up earlier, I had with Dan's work, which kind of shows us the we're starting to get some thawing across the board here, and these are the ETFs. This is Thursday's data. This isn't Friday's data. He hasn't posted Friday. But you can take a look at the other ETFs, and they're starting to thaw, right? Starting to see a little more greens appear. And you take a look at the liquidity stocks, and some of those are already started, right? Now some of them are not, right? Boeing is still in the toilet, Baba is still in the toilet, Comcast is still in the toilet, but other ones are starting to take off. They're starting to show some leadership, some good relative strength, and this is the mosaic. This is exactly the mosaic. So, I saw someone on Twitter sphere today said, we've developed this new, catch the bottom, indicator, da-da-da-da-da. And here's my view of that. You guys didn't ask, but I'm going to tell you anyway. Anybody who tries to do that is a fool. Don't catch the bottom. Use the evidence in front of you. Progressive exposure. Dip your toe in the water. If your new long positions start to work, start taking profits off on your short positions. It's a continuum. Take those profits and start rolling them into newer, longer positions. But progressive exposure in the direction that the market is telling you to go. It's that simple. Anyone who tries to catch the bottom or catch the top is a fool. It's a fool. It's a fool's game because market conditions are going to change. And if you came here to find the tool that's going to have you, catch the bottom or catch the top, then you're going to be disappointed because that's not what we do. We're going to give you tools that you can take and analyze and make your own determination. We caught the bottom, quote unquote, over 3 days. Is that the bottom? Who knows? It's a local bottom. It's last week. We had 2 days of solid uptrends. One of them preceded the other, which is the way it's supposed to work, right? 1 day turns to 2. You start getting longer term. Remember, the railroad track pattern is a 1 to 3 day type of indicator, right? It abated, didn't fully confirm with the action on Thursday. Friday, it did confirm the action. This is telling you that if tomorrow, here's what you do. If this thing continues up on a positive slope, this is the CT in isolation, right? It's the same thing you look at there at the USC. It's the same thing you look there at the tick ARCX. This thing continues on an uptrend tomorrow. Start increasing your long exposure if you're sitting on the sidelines. If this thing reverses down, I would wait for everything to confirm to the downside because you don't know if you're going to get this kind of behavior, like a reversal that rolls over because of news, because of whatever. Everyone's so anxious and think that's the game to play, not for long term. I mean, you can
You can try it. I wouldn't necessarily. Now, if you're a 0DT exclusively, I know there are several of you here. James is short duration. Terry's short duration. You can play within the day. Look for those uptrends to play to the long side, bouncing off key gamma level. Look for the reversals to the downside, like this. Play off levels that are at when we hit a peak in the day, and then look for the CT to confirm a downslope. Then start pushing in that direction and go flat at the end of the day. Great thing to do, and you don't have to look at it.
One thing I wanted to hit on too, Paul. Guys, I'm sharing my screen now for the avoidance of doubt. I am streaming. So I kind of think the theme of the night is kind of the Mosaic approach. And with that thought, what does this thing mean? Can you guys see my screen all right?
I sure can.
Yeah, so along this approach, something I'm crafting on is kind of, it's not an intro to GammaEdge, but it's kind of just like how to use GammaEdge, right? How we think about it. So again, I will say this presentation is in its infancy, but it's kind of timely for what we're talking about. So like the way I think about GammaEdge is a GammaEdge ecosystem. We have the market structure analysis, which is what we've been talking about tonight. Then you have your single stock analysis, and yes, some of the tools go between both, but specific to what we are talking about here tonight, market structure analysis, these are kind of the four pillars of it that I at least look at on a daily basis to kind of form up my mosaic of what's happening. So you have the GEX ratio, you have kind of this plain quad map that we've been talking about. I know this graph here is different than what we have, but it's kind of telling you the same story, right? You have the market tick model, and then long-only portfolios. And so through each of these, that's kind of how I at least form my bias for the day or for the week, where I kind of bring it all home here. So bullish scenario, quad plane map. This is like your green phase, where you could have calls in the money, out of the money dominating. GEX ratio, I just set above 1 because, it just means that the calls are outweighing the puts. I understand that there's some nuance there, but yeah, just for the sake of this example, market tick model, got your short-term ribbon, railroad tracks higher. You have positive breadth thrust on the new highs, new lows. Filter tick showing significant buying, and then the long-only portfolios that we run. I know we only have one right now, which is the P-Trans with plus GEX, but that's increasing exposure. We could be at max exposure, stuff like that. So again, that's just kind of how I look at it, the Mosaic, just multi-factor model that we have and kind of just, what's happening. So, I just wanted to show you guys that.